We live, we live. What a time to be alive. We live. What are we watching? What are we watching in the afternoon? WEI, WEI. And TC.
Mark Douglas, narrated by Walter Dixon. Forward. The great bull market in stocks has led to an equally great bull. Many ideas abound, some good, some not, some original, some just a repackaging of earlier works. Occasionally, though, a writer comes forward with something that really sets him or her apart from the pack, something special. One such writer is Mark Douglas. Mark Douglas, in Trading in the Zone, has written us who view trading as a profession. He has produced it. Trading in the Zone is an in-depth look at the challenges we face when we take up the challenge of trading. To the novice, the only challenge appears to be to find a way to make money. Once the novice learns that tips, broker's advice, and other ways to justify buying or selling do not work consistently, he discovers that he either needs to develop a reliable trading strategy or purchase one. After that, trading should be easy, right? All you have to do is rules, and the money will fall into your lap. At this point, if not before, novices discover that trading can turn into one of the most frustrating experiences they will ever face. This experience leads to the oft-stated statistic.
It's Power Hour. What's moving?
Futures traders lose
Babyface in the building.
Year of trading. Stock traders
Welcome, Babyface in the building.
Which is why pundits always point to the fact that most stock traders fail to outperform a simple buy and hold investment scenario. So, two people, the majority of whom are extremely successful in other occupations, fail so miserably as traders.
So far, so great.
Are successful traders born and not made?
What's moving? We got WEI, SYNL,
is that the individual
and TC.
The trader's mindset. It sounds easy, but the fact is,
this mindset
is very foreign when compared with the way our life experiences teach us to think about the world. That 95% failure rate makes sense when you consider how most of us experience life, using skills learned as we grow. When it comes to trading, however, it turns out that the skills we learn to earn high marks in school, advance our careers, and create relationships with other people, the skills we are taught that should carry us through life, turn out to be inappropriate for trading. Traders, we find out, must learn to think in terms of probabilities and to surrender all of the skills we have acquired to achieve in virtually every other aspect of our lives. In Trading in the Zone, Mark Douglas teaches us how. He has put together a very valuable audiobook. His sources are his own personal experiences as a trader's coach in Chicago, author, and lecturer in his field of trading psychology. My recommendation? Enjoy Douglas's Trading in the Zone, and in doing so, develop a trader's mindset. Tom Hartle. Preface. The goal of any trader is to turn profits on a regular basis, yet so few people ever really make consistent money as traders. What accounts for the small percentage of traders who are consistently successful? To me, the determining factor is psychological. The consistent
I have to go cast my vote. 3:30.
I started trading in 1998. At the time, I was managing a commercial casualty insurance agency in the suburbs of Detroit, Michigan. I had a very successful career, and I thought I could easily transfer that success into trading. Unfortunately, I found out that was not the case. By 1981, I was thoroughly disgusted with my inability to trade effectively while holding another job.
We're talking WEI,
to Chicago,
TC
got a job
and
as a broker at Merrill
SYNL
Lynch at the Chicago Board of Trade. How
for
did I do?
Power Hour.
Well, within 9 months of moving to Chicago, I had lost nearly everything I owned. My losses were the result of both my trading activities and my exorbitant lifestyle, which demanded that I make a lot of money as a trader. From these early experiences as a trader, I learned an enormous amount about myself and about the role of psychology in trading. As a result, in 1982, I started working on my first book, The Disciplined Trader, Developing Winning Attitude. When I began this project,
GOED
I had
is
no
below
concept of how
10
difficult it
bucks.
was to write a book or explain something
Starting
that I
to break
understood
down.
myself in a manner and
GOED
form that would be useful to other people.
might be a good buying
I thought it was going
opportunity
to
here.
take me between 6 and 9 months to get the job done. It took 7.5 years and was finally published by Prentice Hall in 1990. In 1983, I left Merrill Lynch to start a consulting firm, Trading Behavior Dynamics, where I presently develop and conduct seminars on trading psychology and act in the capacity of what is commonly referred to as a trading coach. I've done countless presentations for trading companies, clearing firms, brokerage houses, banks, and investment conferences all over the world. I've worked at a personal level, one-on-one, with virtually every type of trader in the business, including some of the biggest floor traders, hedgers, option specialists, and CTAs, as well as neophytes. As of this writing, I have spent the last 17 years dissecting the psychological dynamics behind trading so that I could develop effective methods for teaching the proper principles of success. What I've discovered is that, at the most fundamental level, there is a problem with the way we think. There is something inherent in the way our minds work that doesn't fit very well with the characteristics shown by the markets. Those traders who have confidence in their own trades, who trust themselves to do what needs to be done without hesitation, are the ones who become successful. They no longer fear the erratic behavior of the market. They learn to focus on the information that helps them spot opportunities to make a profit, rather than focusing on the information that reinforces their fears. While this may sound complicated, it all boils down to learning to believe that 1. You don't need to know what's going to happen next to make money. 2. Anything can happen. And 3. Every moment is unique, meaning every edge and outcome is truly a unique experience. The trade either works or it doesn't. In any case, you wait for the next edge to appear and go through the process again and again. With this approach, you will learn in a methodical, non-random fashion what works and what doesn't. And, just as important, you will build a sense of self-trust so that you won't damage yourself in an environment that has the unlimited qualities the markets have. Most traders don't believe that their trading problems are the result of the way they think about trading, or more specifically, how they are thinking while they are trading. In my first book, The Disciplined Trader, I identified the problems confronting the trader from a mental perspective, and then built a philosophical framework for understanding the nature of these problems and why they exist. I had 5 major objectives in mind in writing Trading in the Zone. To prove to the trader that more or better market analysis is not the solution to his trading difficulties or lack of consistent results. To convince the trader that it's his attitude and state of mind that determine his results. To provide the trader with the specific beliefs and attitudes that are necessary to build a winner's mindset, which means learning how to think in probabilities. To address the many conflicts, contradictions, and paradoxes in thinking that cause the typical trader to assume that he already does think in probabilities when he really doesn't. To take the trader through a process that integrates this thinking strategy into his mental system at a functional level. Note, until recently, most traders were men, but I recognize that more and more women are joining the ranks. In an effort to avoid confusion and awkward phrasing, I have consistently used the pronoun he throughout this audiobook in describing traders. This certainly does not reflect any bias on my part. Trading in the zone presents a serious psychological approach to becoming a consistent winner in your trading. I do not offer a trading system. I am more interested in showing you how to think in the way necessary to become a profitable trader. I assume that you already have your own system, your own edge. You must learn to trust your edge. The edge means that there is a higher probability of one outcome than another. The greater your confidence, the easier it will be to execute your trades. This audiobook is designed to give you the insight and understanding you need about yourself and the nature of trading, so that actually doing it becomes as easy, simple, and stress-free as when you're just watching the market and thinking about doing it. In order to determine how well you think like a trader, take the following attitude survey. There are no right or wrong answers. Your answers are an indication of how consistent your current mental framework is with the way you need to think.
Jimmy in the building. This is Trading in the Zone by Mark Douglas. I don't know if you can see it.
Mark down agree or disagree for each of the following statements. 1. To make money as a trader, you have to know what
Check out my playlist. It's on my playlist.
2.
Welcome,
Sometimes
Jimmy in the building.
There must be a way to trade without having to take a loss.
Please like the live.
3. Making money as a trader is primarily a function of analysis.
I have to go cast my vote.
Losses are an unavoidable component of trading.
3:30.
5. My risk is always defined before I enter a trade. 6. In my mind, there is always a cost associated with finding out what the market may do next. 7. I wouldn't even bother putting on the next trade if I wasn't sure that it was going to be a winner. 8. The more a trader learns about the markets and how they behave, the easier it will be for him to execute his trades. 9. My methodology tells me exactly under what market conditions to either enter or exit a trade. 10. Even when I have a clear signal to reverse my position, I find it extremely difficult to do. 11. I have sustained periods of consistent success, usually followed by some fairly drastic drawdowns in my equity. 12. When I first started trading, I would describe my trading methodology as haphazard, meaning some success in between a lot of pain. 13. I often find myself feeling that the markets are me personally. 14. As much as I might try to let go, I find it very difficult to put past emotional wounds behind me. 15. I have a money management philosophy that is founded in the principle of always taking some money out of the market when the market makes it available. 16. A trader's job is to identify patterns in the market's behavior that represent an opportunity, and then to determine the risk of finding out if these patterns will play themselves out as they have in the past. 17. Sometimes I just can't help feeling that I am a victim of the market. 18. When I trade, I usually try to stay focused in one time frame. 19. Trading successfully requires a degree of mental flexibility far beyond most people. 20. There are times when I can definitely feel the flow of the market. However, I often have difficulty acting on these feelings. 21. There are many times when I am in a profitable trade and I know the move is basically over, but I still won't take my profits. 22. No matter how much money I make in a trade, I am rarely ever satisfied and feel that I could have made more. 23. When I put on a trade, I have a positive attitude. I anticipate all of the money I could make from the trade in a positive way. 24. The most important component in a trader's ability to accumulate money over time is having a belief in his own consistency. 25. If you were granted a wish to be able to instantaneously acquire one trading skill, what skill would you choose? 26. I often spend sleepless nights worrying about the market. Agree or disagree? 27. Do you ever feel compelled to make a trade because you are afraid that you might miss out? Yes or no? 28. Although it doesn't happen very often, I really like my trades to be perfect. When I make a perfect call, it feels so good that it makes up for all the times that I don't. Agree or disagree? 29. Do you ever find yourself planning trades you never execute and executing trades you never plan? Yes or no? 30. In a few sentences, explain why most traders either don't make money or aren't able to keep what they make. Set aside your answers as you listen through this audiobook. After you've finished the last chapter, Thinking Like a Trader, take the attitude survey again. It's at the back of the audiobook as well. You may be surprised to see how much your answers differ from the first time. Chapter 1. The Road to Success. Fundamental, technical, or mental analysis. In the beginning, fundamental analysis. Who remembers when fundamental analysis was considered the only real or proper way to make trading decisions? I started trading in 1978. Technical analysis was used by only a handful of traders who were considered by the rest of the market community to be, at the very least, crazy. As difficult as it is to believe now, it wasn't very long ago when Wall Street and most of the major funds and financial institutions thought that technical analysis was some form of mystical hocus pocus. Now, of course, just the opposite is true. Almost all experienced traders use some form of technical analysis to help them formulate their trading strategies. Except for some small, isolated pockets in the academic community, the purely fundamental analyst is virtually extinct. What caused this dramatic shift in perspective? I'm sure it's no surprise to anyone that the answer to this question is very simple. Money. The problem with making trading decisions from a strictly fundamental perspective is the inherent difficulty of making money consistently using this approach. For those of you who may not be familiar with fundamental analysis, let me explain. Fundamental analysis attempts to take into consideration all the variables that could affect the relative balance or imbalance between the supply of and the possible demand for any particular stock, commodity, or financial instrument. Using primarily mathematical models that weigh the significance of a variety of factors, interest rates, balance sheets, weather patterns, and numerous others, the analyst projects what the price should be at some point in the future. The problem with these models is that they very rarely, if ever, factor in other traders as variables. People, expressing their beliefs and expectations about the future, make prices move, not models. The fact that a model makes a logical and reasonable projection based on all the relevant variables is not of much value if the traders who are responsible for most of the trading volume are not aware of the model or don't believe in it. As a matter of fact, many traders, especially those on the floors of the futures exchanges who have the ability to move prices very dramatically in one direction or the other, usually don't have the slightest concept of the fundamental supply and demand factors that are supposed to affect prices. Furthermore, at any given moment, much of their trading activity is prompted by a response to emotional factors that are completely outside the parameters of the fundamental model. In other words, The people who trade, and consequently move prices, don't always act in a rational manner. Ultimately, the fundamental analyst could find that a prediction about where prices should be at some point in the future is correct. But in the meantime, price movement could be so volatile that it would be very difficult, if not impossible, to stay in a trade in order to realize the objective. The shift to technical analysis. Technical analysis has been around for as long as there have been organized markets in the form of exchanges. But the trading community didn't accept technical analysis as a viable tool for making money until the late 1970s or early 1980s. Here's what the technical analyst knew that it took the mainstream market community generations to catch on to. A finite number of traders participate in the markets on any given day, week, or month. Many of these traders do the same kinds of things over and over in their attempt to make money. In other words, individuals develop behavior patterns, and a group of individuals interacting with one another on a consistent basis form collective behavior patterns. These behavior patterns are observable and quantifiable, and they repeat themselves with statistical reliability. Technical analysis is a method that organizes this collective behavior into identifiable patterns that can give a clear indication of where there is a greater probability of one thing happening over another. In a sense, technical analysis allows you to get into the mind of the market to anticipate what's likely to happen next based on the kind of patterns the market generated at some previous moment. As a method for projecting future price movement, technical analysis has turned out to be far superior to a purely fundamental approach. It keeps the trader focused on what the market is doing now in relation to what it has done in the past, instead of focusing on what the market should be doing based solely on what is logical and reasonable as determined by a mathematical model. On the other hand, fundamental analysis creates what I call a reality gap between what should be and what is. The reality gap makes it extremely difficult to make anything but very long-term predictions that can be difficult to exploit, even if they are correct. In contrast, technical analysis not only closes this reality gap, but also makes available to the trader a virtually unlimited number of possibilities to take advantage of. The technical approach opens up many more possibilities because it identifies how the same repeatable behavior patterns occur in every time frame, moment to moment, daily, weekly, yearly, and every time span in between. In other words, technical analysis turns the market into an endless stream of opportunities to enrich oneself. The shift to mental analysis.
7 more minutes on the live.
So well, why would more and more of the trading community shift their focus from technical analysis of the market to mental analysis of themselves, meaning their own individual trading psychology?
Get this out the way.
To answer this question, you probably don't have to do anything more than ask yourself why you bought this audiobook. The most likely reason is that you're dissatisfied with the difference between what you perceive as the unlimited potential to make money and what you end up with on the bottom line. That's the problem with technical analysis, if you want to call it a problem. Once you learn to identify patterns and read the market, you find there are limitless opportunities to make money. But as I'm sure you already know, there can also be a huge gap between what you understand about the markets and your ability to transform that knowledge into consistent profits or a steadily rising equity curve. Think about the number of times you've looked at a price chart and said to yourself, it looks like the market is going up, or down as the case may be. And what you thought was going to happen actually happened. But you did nothing except watch the market move while you anguished over all the money you could have made. There's a big difference between predicting that something will happen in the market and thinking about all the money you could have made, and the reality of actually getting into and out of trades. I call this difference, and others like it, a psychological gap that can make trading one of the most difficult endeavors you could choose to undertake, and certainly one of the most mysterious to master. The big question is, can trading be mastered? Is it possible to experience trading with the same ease and simplicity implied when you are only watching the market and thinking about success, as opposed to actually having to put on and take off trades? Not only is the answer an unequivocal yes, but that's also exactly what this audiobook is designed to give you. The insight and understanding you need about yourself and about the nature of trading. So the result is that actually doing it becomes as easy, simple, and stress-free as when you are just watching the market and thinking about doing it. This may seem like a tall order, and to some of you it may even seem impossible, but it's not. There are people who have mastered the art of trading, who have closed the gap between the possibilities available and their bottom-line performance. But as you might expect, these winners are relatively few in number, compared with the number of traders who experience varying degrees of frustration, all the way to exasperation, wondering why they can't create the consistent success they so desperately desire. In fact, the differences between these two groups of traders, the consistent winners and everyone else,
like the live
are analogous to the differences between the Earth and the Moon. The Earth and the Moon are both celestial bodies that exist in the same solar system, so they do have something in common. But they are as different in nature and characteristics as night and day. By the same token, anyone who puts on a trade can claim to be a trader. But when you compare the characteristics of the handful of consistent winners with the characteristics of most other traders, you'll find they're also as different as night and day. If going to the moon represents consistent success as a trader, we can say that getting to the moon is possible. The journey is extremely difficult, and only a handful of people have made it. From our perspective here on Earth, the moon is usually visible every night, and it seems so close that we could just reach out and touch it. Trading successfully feels the same way. On any given day, week, or month, the markets make available vast amounts of money to anyone who has the capacity to put on a trade. Since the markets are in constant motion, the money is also constantly flowing, which makes the possibilities for success greatly magnified and seemingly within your grasp. I use the word seemingly to make an important distinction between the two groups of traders. For those of you who have learned how to be consistent, or have broken through what I call the threshold of consistency, the money is not only within their grasp, they can virtually take it at will. I'm sure that some will find this statement shocking or difficult to believe, but it's true. There are some limitations, but for the most part, money flows into the accounts of these traders with such ease and effortlessness that it literally boggles most people's minds. However, for the traders who have not evolved into this select group, the word seemingly means exactly what it implies. It seems as if the consistency or ultimate success they desire is at hand or within their grasp, just before it slips away or evaporates before their eyes time and time again. The only thing about trading that is consistent with this group is emotional pain. Yes, they certainly have moments of elation, but it is not an exaggeration to say that most of the time they are in a state of fear, anger, frustration, anxiety, disappointment, betrayal, and regret. So what separates these two groups of traders? Is it intelligence? Are the consistent winners just plain smarter than everyone else? Do they work harder? Are they better analysts, or do they have access to better trading systems? Do they possess inherent personality characteristics that make it easier for them to deal with the intense pressures of trading? All of these possibilities sound quite plausible, except when you consider that most trading industry's failures are also some of society's brightest and most accomplished people.
1 minute, 1 minute.
The largest group of consistent losers is composed primarily of doctors, lawyers, engineers, scientists, CEOs, wealthy retirees, and entrepreneurs. Furthermore, most of the industry's best market analysts are the worst traders imaginable. Intelligence and good market analysis can certainly contribute to success, but they are not the defining factors that separate the consistent winners from everyone else. Well, if it isn't intelligence or better analysis, then what could it be? Having worked with some of the best and some of the worst traders in the business, and having helped some of the worst become some of the best, I can state without a doubt that there are specific reasons why the best traders consistently outperform everyone else.
There you have it, ladies and gentlemen. Shout out to Babyface, Jimmy Brunette, Cleggy. I am going dark right now. Gotta go cast my vote. Let me see if anything running before I go. So we got WEI, the one to watch. WEI. Market's kind of weird. All right, let's.
You're not clean. You and your team. They get rich. Everybody chill. So what I mean to the world? Got a lot of money invested in a game play. Every day, you want your money at? Subscribe to the Notch. Food for gas. Got a lot of money invested in a game play. Every day, you want your money at? Subscribe to the Match. Food for gas. Done money, done car deal. Done steering. Done wheel. Legal money and no drugs deal. Can't see. Big deal. So real sleeve. Contract side. Done deal. Money a pool like castle. Got a lot of money invested in a game play. Every day, you want your money at? Subscribe to the Notch. Foot for gas, rich. You listen, Danny be the jingle king. Have a little argument for Gono. But you know, I find myself for the money. And instead of squander it and go on with foolishness and go along with. You want your money at? Subscribe to Dave Natch. Please, me I tell you now. Go on, go make the money now, please. Yeah, man. I want to do it fast and quick here. Subscribe to Dave Natch. Fast, don't stop. Every day, you want the money go, check DAVESPLAY. Invest. Interest. Bless.
Thank you for tuning in, ladies and gentlemen. Dave Natch. I'm out.